coin shop dealer overrun. Gold prices cause panic. People are dumping their gold. This panic has caused local shops to say they're out of cash. I visited my local coin shop today, and this panic, this dumping gold, is causing shops and distributors to be overrun. I'm going to break this down so you're prepared for how this plays out. Do not be left behind. When you bring gold into a local shop, it plays out in two ways. First, if it's something common, then your dealer can flip it and sell it to another customer. But if it's something rare or expensive, like this gold that I'm holding, even more expensive, something like this Proof Libertad, there's an incredible premium on top of these. So if it's expensive, then they know that they cannot flip it to a local customer. The dealer sells it to his distributor. Now, this panic, this dumping of gold, has overwhelmed distributors to the point where they're telling local shops they need to wait 2 weeks out. You heard that correctly. 2 weeks out. The local shop then needs to pay their customers with a check and ask to hold off before cashing it. This is all happening when gold is actually dropping in price. People are clearly afraid that gold is on its way down and they want to get out while the price is strong. This is from Kitco, and the title of the article says, "Nothing has changed for gold except price." If you ever need proof that algorithmic trading has dominated the marketplace, look no further than today's price action in the gold market. This is the article. They continue, the gold market took two significant hits Friday as black boxes traded only on the headlines instead of looking at the details in the broader landscape. In a single day, gold prices dropped more than 3.5%, the biggest intraday sell-off since 2020. Looking ahead, analysts have said that with this renewed selling pressure, gold prices could eventually test support at $2,200 an ounce. So that's where we're seeing panic. People are looking at that 2,200 and they're assuming in their mind, whoa, if we're looking at 2,200, then we're probably shortly going to be looking at 2,100, 2,000, and then coming down to where gold was hovering for the past few years, which was around 1,800, 1,900. That's what's going on in people's mind. So this article says just what my local coin shop has been telling me. Despite this dramatic sell-off, this is the article, despite this dramatic sell-off, the market's fundamentals have not changed, but gold with this hit has caused people to panic. Now, gold took its first hit during the Asian trading session. Data from the People's Bank of China revealed that the central bank did not buy any gold last month. That is a shock because China has been hoarding gold for the past 18 months. Let's continue with the article. The article says, the reaction in the gold market, investors now believe that China's central bank will never buy another ounce of gold again. China's been buying gold, as I just said, for the last 18 months. It's ridiculous to expect that this trend will continue without some sort of pause. Stubborn inflation, this is the article, stubborn inflation, geopolitical uncertainty, and diversification away from the US dollar are reasons why central banks have voraciously bought gold and will continue to build their reserve. Absolutely. Now, even if gold purchases become more staggered, central bank demand will remain a solid pillar of support for the foreseeable future. Now, there's another reason people are panicking, and it's the data that was released last week. This article hits it. This article says, gold took its second hit at the start of the North American session after employment data showed that the U.S. economy created 272,000 jobs, significantly beating expectations. At the same time, wages increased 0.4%, also beating expectations. So when we see a strong economy, people immediately assume that money is going to be pulled out of precious metals, out of that safe store, and that money is going to go to more risky investments. It's going to go to Wall Street. So people who are holding gold, they see this shift going on, even though it is strength. We do want the economy to be strong. We want more jobs. At the same time, for gold, that could be a sign that people are going to pull out. And everyone follows that thought. They start pulling out of gold. And that's why we're seeing this panic and this push into the local shop. Now, when that all comes down at once and everyone is having a rush, it's like rushing on a bank. You know, it's like everybody's coming in to the local shop. They're cashing out. The dealer cannot handle that. The distributors cannot handle that. So this causes a lag and a wait. What other industry can you think of where there's such a fast need for cash? I mean, it's incredible. Imagine the Apple store and everybody's suddenly bringing back their iPhones, bringing back their, how much is an Apple computer these days? $3,000, right? Everybody's bringing those back in for cash. Even they would be struggling for cash. As we see this play out on our local level, This tells us as silver stackers and gold stackers, the very few who are still able to stack gold. Most of us who are gold stackers are living by the silver to gold ratio. We're still stacking gold. We're just accumulating silver to eventually swap that for gold. But this tells us to stay the course, because gold has hit its all-time high, yes, and of course it will correct. Of course, this should not be a surprise. That's why seasoned stackers, we don't panic when we see a dip in silver price or gold price. We don't panic. We know that it fluctuates, and we know that this is how the market moves. If you're enjoying this video, please hit like, please hit subscribe. It really helps to get this information out there.